It's that time of the year when you obviously want some wisdom for the year ahead. And as we step into somewhat 2082, who better than market maverick Madhusudhan Kela joining in to give us that piece of advice and wisdom for the year forward. Madhu, wish you a very happy Diwali firstly from all of us at ET Now.
Aisha, wishing you, all your colleagues and all your viewers a very, very, very happy Diwali. And may Mata Rani bless with hands full to all who are watching you. Thank you so much for having me here today.
Right. Thank you, Madhu. But Madhu, happy ones are the only ones who invested in gold and silver. How do you make peace with that?
No, these are phases of markets and investing career, Aisha. 6 months return or a 1 year return doesn't make winning or a losing bet, right? And any which way, we have always advocated a portfolio approach. So I'm sure people would have had some portion of their money into gold. So, but I think if you look at Aisha, even in the last 5 year, 10 year, 15 year, 20 year, 25 year, any time frame, as an equity investor, I'm not disappointed having a conviction in equity and continue to have that conviction in equity. Because see, at the end of the day, all gold or silver rallies, none of them are based on any fundamentals, right? If I buy a good company, maybe 5, 10, 20 years down the line, that company's earning may go up 2 times, 4 times, 8 times, whatever it is. So the value is actually decreasing of the company which I'm buying. In absolute term, I'm buying the company much cheaper. But when I buy gold or silver, I am only buying it for technical reasons and not for fundamental reasons.
So Madhu, what do we look forward to the year ahead? Do you think earnings will come back? Because part of the reason that the market went into this range-bound lull is because earnings gave way while the valuations still were elevated. Valuations are a little comfortable now, but the question mark is on earnings.
So we have had a kind of more than 1 year of consolidation, Aisha, right? And we are already in 2026. And we are talking of 2027 earnings, right? So my personal view is that a lot is being done in the last 6 months. If you start from the budget, more than 1 lakh crore rupees of economic incentives in the form of tax cuts were being given. More than 1 lakh crore rupees of GST benefits are being given. All of that will start to reflect. RBI has done a fabulous job of infusing a lot of liquidity in the system. We have had a 100 basis point cut from RBI in the last 6-9 months. We have had a very good monsoon. So I think the earnings will pick up from here, and hopefully over the next 2 quarters, markets will also start to get comfort. And when I look at maybe 2027 as a number, the market is not looking as overpriced as it was looking in 2025 when we made like some kind of a intermittent top. So I am more constructive on the overall earning recovery than what would have been maybe even 6 months before.
Mr. Kela, hi. This is Harsha. Great chatting. So if one were to look at it from a 30,000 feet lens, there's plenty playing out. You're talking of an earnings revival which is likely to kick in. The tariff situation likely has reached its top. Give us your view, therefore. Do you see that the next 3 months the markets will very quickly start pricing in all of these factors, which will likely play out over the next 6 months?
Yeah, and happy Diwali to you as well.
Very happy Diwali, sir.
So I would say that markets will be more constructive than what they have been in the last 12-15 months, which I think it was kind of a lull. Across the indices, we have seen kind of red in the last 1 year. I would be more constructive on the overall market, but the bigger thing will be in India as always. What do you buy? It's just that the market will rise. That doesn't mean that anyone will make extraordinary returns. It's that the the companies which you buy on a bottom-up basis or the industries which you pick up, which are going to really have a real run over the next few years, that is what has determined stock returns in the last many years. And more specifically, even if you look at last 1 year, while the markets were dull, but there's so many stocks which you can come across which are given like 30, 40, 50, 60, even 100% return, even in markets like this. So India's story, hers, is all about, even if you have a reasonably good market, like the market goes up 10% from here, let's say hypothetically, for the next 1 year, you will still be able to identify companies which can give us 20, 30, 40, 50% return with the 10% rise in markets.
Yeah.
So, what are those segments, sectors that will lead that revival? Give us a lens into that, because obviously it will be rotational. There will be certain sectors which will benefit disproportionately right off the bat, and thereafter it will carry through across the other ones as well.
So I will want to talk a little bit hatke today, because all the normal things are being spoken. There is so much research which is around there. There is no point really repeating. So there are two things which really come on back of my mind. A, we should look at companies which are really, and this is not, I'm not talking from a 12-month perspective, but maybe from a slightly longer term perspective, the companies which are really, really going to benefit out of this AI usage. Because that is something which we all of us are experiencing, that it is coming, right? Even in my own office, I'm experiencing that how AI is actually making us more and more efficient. So we have to look for companies which will benefit disproportionately, and they will not have to pass on the benefit immediately. So this will be one segment which I think could come out as a big winner. And the other thing which is again linked to it, is the power sector, because I've been reading a lot of global reports and even some local reports that the power consumption, even because of the AI over a medium long term, could actually surprise the markets. So now the obvious producers of, let's say, solar or thermal, they are all kind of being discovered. But there will be a lot of companies which will benefit. Let's say if I make a case to you today that power cost structurally could come down by 50% over the next 3 years. So a lot of the companies which are actually in the consumption side of the power, they could benefit disproportionately because of this change. So what I'm saying, the obvious things are being discussed, they are being debated, they are being analyzed, I think to the hilt by the market and market participants. For us to be able to make some real extraordinary returns, we have to take a slightly longer term call and slightly futuristic call. And that is where, in my opinion, the real money is.
It is indeed, and data centers, like Madhu, you rightly pointed out, they are the ones which are going to be consuming all those powers, and surely seems like a good bet, and an AI derivative at that. But Madhu, the other leg is also the consumption leg, right? We've talked about the big stimulus which both the government as well as the RBI has instilled. Now the obvious choice is, your go-to staples, autos, etc. But do you think the other way to play it also could be via perhaps NBFCs and housing-focused NBFCs? Is that a structural trend that you're looking at?
Aisha, we have been quite positive. We spoke in your own channel maybe 1.5 years back about the NBFC sector, and it has done selectively, it has done reasonably well. So that could be a right way to play it. But on the consumption, Aisha, I don't find stocks really attractive. Even when I, let's say, want to go and buy an auto company, can I look at an obvious choice where I can double my money in the next 2 years? It is damn difficult for me to be able to identify and find those kind of bets where I can double my money in the next 2-3 years. So I would say that, and also this trend, Aisha, there's one interesting thing which we are observing, because access to money is coming easily. A lot of the companies, or even smaller companies, are able to list on the SME exchange, are able to access capital. So there, even though the category as a whole is growing, but it is not coming maybe to the entire benefit is not coming maybe to the larger companies, because a lot of regional brands and a lot of regional players are coming up in the consumption sector everywhere. So maybe the opportunity is to bet on some of them, which are very small today, which have got access to capital, and they could make something big out of it.
Mr. Kela, two spaces where you're known to bet big and bet well, and some of those bets have played out beautifully. Manufacturing, pharmaceuticals. Are those opportunities still, are there large opportunities to make large wealth still available in both of those? And when do you see manufacturing revive in significant fashion? Do you have a sense of when that happens?
Yeah. First, that is shifting. When we started talking about manufacturing, it's kind of shifting gears. And I would continue to remain very positive on the overall India manufacturing, because that's the government effort to indigenize a lot of these things are clearly visible. Whether you talk of, some incentives which are given to local companies for manufacturing, for instance, in solar or cell, there clearly local companies are being given advantage to supply to local markets. There are tariffs, there are PLI benefits which are being given to a lot of manufacturing industries. So I would still bet, but this is very selective words. Can I make a case that you buy anything and everything in manufacturing and you will make money? That is possibly not as easy as it was maybe 4 years back. But I would say there are still opportunities really to benefit out of the niche players which are coming up, which have got aggressive growth plan. And that's where I would say the real bet is really being able to identify an extraordinary entrepreneur who has his soldiers down and who has really a methodical plan for growth. And honestly, what I am able to see, so many new companies coming up, so many new public issues coming up. In the last 3-4 years, there are more than 1,000 companies which have got listed on the SME exchange. Some of them will turn out to be big winners of future.